without precedent. How will cryptocurrencies react to rising US interest rates? Hey YouTube, watch this video. Throughout most of 2021, the Federal Reserve and the US government blamed rising prices on transitory, pandemic-inspired supply chain bottlenecks. The theme has become a rallying point for Fed critics, blaming the central bank for the highest inflationary pressures in more than 4 decades. While the government's characterization of inflation as transitory was politically convenient rhetoric, it was unforgivable for the politically neutral central bank. In late 2021, when the FOMC members experienced the epiphany that the economic condition was more structural than temporary, the Fed continued to crawl at a snail's pace in addressing the rising price with monetary policy. Quantitative easing that pushed interest rates lower further out along the yield curve didn't end until early March 2022 and lift off from a 0% Fed funds rate did not occur until the March 2022 meeting. Meanwhile, in March 2022, CPI and PPI rose to 8.5% and 12.2% respectively, the highest level in 4 decades. Now the Fed is far behind the inflationary curve. Cryptocurrencies do not have much experience in an inflationary environment where the Fed pushes rates higher. Uncharted territory for cryptos. Many cryptocurrency market supporters viewed the asset class as a hedge against inflation. The economic condition erodes fiat currency values as government can issue legal tender to their hard content. Expanding the money supply, crypto supplies are limited to mining and other activities, making them an alternative to the fiat as the conventional money supply grows to stimulate the economy. Inflation began to rise in the second half of 2020 and exploded higher in 2021. The leading cryptocurrencies raised record peaks on November 10, 2021. As inflation rose and monetary policy fell far behind the inflationary curve. Ethereum reached a record high of 4.8 and 65.426 dollars on the same day. The leading cryptos turned lower, reaching the most recent lows on January 24, 2022. On Wednesday, the Fed hiked interest rate 50 basis points higher and outlines its plans to reduce its swollen balance sheet. As the Fed addresses rising inflation, crypto values remain closer to the January 25 low than the November 10, 2021 high. So far so good. Note: The tidal move of central bank liquidity and tsunami of government stimulus that began in 2020 planted inflationary seeds that supported during the second half of 2020 and bloomed in 2021 and over the first 4 months of 2022. Thank you for watching. See you in the next video. Bye bye.